What's up, everybody? Jaspreet Singh, and inflation numbers just came in, and they are a lot higher, not only than what people expected, but even higher than previous months. Inflation came in at 9.1%. This is the first time that we broke 9% in the headline CPI numbers since the early 1980s. And let me give you a couple of the numbers right here. So what it says is that consumers have paid a lot more for regular things like food. Food prices are up 12.2% over the year. Cereals up 12.2%. Dairy's up 13.5%. Meat is up almost 14% over the last year. So inflation numbers much higher than what people expected. Economists expected inflation to be 8.8%. Again, that's higher than what we've had previously, but we came in at 9.1, which is even higher than that. And the biggest leading factor to this higher inflation number is energy, gas prices. I mean, last month gas prices were through the roof. We were above 5% at $5 average gas across the country, which is, the highest that we've ever seen. Now gas prices have come down a little bit, so you can expect to see that in next month's inflation report. But this is where there's a lot of different kind of opinions about what's going on. So I'll be talking about more about this tomorrow, and we're going to talk about this in market briefs. However, you have a few different opinions. Some people say that this is the peak. We've heard that before, but they're saying that this is the peak now because energy prices have started to come down. Gas prices have started to come down. And so starting next month, we're going to start to see what the Federal Reserve Bank has done up to date. And we're going to start to see the prices of things come down. And inflation is now on the way down. On the flip side, this is where everyone's saying the Fed needs to get more aggressive to fight inflation. The Fed needs to do more to fight inflation because inflation has not started to stabilize. It has not started to go down. It is still going higher. And so the Federal Reserve Bank is going to be meeting at the end of this month in July to decide what they want to do with interest rates. And somebody from the government came out today, and essentially they said that this almost solidifies that the Fed is going to have to increase interest rates by another 0.75% in July, which is, again, one of the highest interest rate hikes that we've seen. We did it last month, but before last month is the highest that we've seen since the early 1990s. And the reason why is because inflation is so high, and that would then affect the stock market, the real estate market, the crypto market, and the economy, because now interest rates go up. Like we saw what happened with mortgage rates last month. As soon as the Fed jacked up interest rates, the 30-year fixed rate went above 6%. And now you can bet that because inflation is so high, that the Fed is going to want to take stronger action. And if there's taking stronger action, you can bet mortgage rates are probably going to go even higher than where they were last month. So these are things that you want to be aware of. And there's one thing, I was just listening to CNBC, and one of the economists, the National Economic Council director from the White House, came out and said that this is more reason that the government needs to pass their bill to improve the infrastructure, to improve the supply chain in the United States. And the CNBC commentator responded and he said, quote, "That's interesting because typically more spending is not what you do in a high inflationary time because more spending causes more inflation." And he responded by saying, "Yes, but look at the economy. We need to build more supply." So you still have a lot of debate as to what causes inflation. Is it supply issues? Is it money printing? And according to the White House and according to the Fed, a little bit less of the Fed now, but they never admit it. But according to the White House, the reason why we have inflation issues has nothing to do with government spending. It has nothing to do with Federal Reserve Bank spending. It has nothing to do with money printing. It has everything to do with just supply and demand. And if the government spends more money, meaning the Fed prints more money, funds the government, and the government spends more money to build more supply chain things, then that's going to help the prices of things cool down. Now, I've talked about this a lot, but the root cause of inflation at the very root is money printing. When you produce more money without producing more wealth, it causes the value of each individual dollar to go down. So that's one of the things that you want to be aware of. And this brings me to the topic of markets, because markets and the economy react differently to inflation than you might think, because inflation and a recession affect markets kind of uniquely. Now, if you haven't joined Market Briefs yet, I highly recommend you do that. That's the free financial newsletter that I created, because in that we will kind of go over all the things that I'm talking about in more detail. Market Briefs is free. It's a fun, easy to read, witty breakdown of what's going on in the stock market, the real estate market, crypto, inflation, and the global economy. So if you're looking for a way to stay up to date on what's happening in all the markets without spending hours reading all the financial news, Market Briefs is a free tool for you to use. So if you want to join Market Briefs for free, I'll put the link to how you can do it down in the description below. But inflation, high inflation, traditionally is good for asset prices, because when you have high inflation, people want to move their money out of cash and they want to own these assets. But what's been happening recently is high inflation is now becoming a driver for the Fed to raise interest rates. And it's a driver for now the Fed to fight inflation. And this fight on inflation is bad for markets, because when the Fed is fighting inflation, they're pulling cash out of the economy, right? They're doing quantitative tightening. They're raising interest rates. And when the Fed is raising interest rates, it makes borrowing money more expensive. And when you make borrowing money more expensive, well, that hurts the housing market, because now you have to pay more money for your mortgage because mortgage rates are higher. Businesses have to pay more money to borrow money. So that pulls down stocks, that hurts the valuations of startups, and that hurts the general economy now, because if it's more expensive to do business, then the economy just can't grow as fast as it could have before. So this is where high inflation is bad news for markets, and then the Fed raising interest rates is bad news for markets. But interestingly now, more talks about a recession and an economic slowdown is becoming good news for markets, which becomes very ironic because you don't really expect that. But the reason why is because people in the markets are now expecting and almost factoring in, or they are factoring it in according to a couple articles on Bloomberg, that you have investors and traders on Wall Street that are now looking at this recession saying it's great news because it's going to put pressure on the Federal Reserve Bank to do more quantitative easing, meaning to do more things that cause more inflation. So doing more things like cutting interest rates, to do more things like stimulating, because all those things will pump more cheap dollars into the markets, into the economy. So kind of this weird conundrum that we have going on, where high inflation means a fight on inflation, which is bad for markets, bad for the economy. However, a recession is looked at as good news by the markets now, because anytime you hear talks about a recession coming, markets are actually not reacting badly. In fact, people are saying that's good because now the Fed will do more sort of quantitative easing if we have a recession, and that's going to push market prices higher. So those are the things that you want to be aware of. And then the last thing that I want to go over has to do now with the things you need to be doing with your money. Because yes, the Fed is working to raise interest rates. The Fed is working to fight off inflation. But there's still this kind of debate as to what is causing inflation. You're still seeing a lot of government spending. The government wants to do more spending. They're talking now about raising your individual taxes, particularly for high-income earners, but we'll see what actually happens. But they want to raise taxes on people. That way they can fund more government spending. So at the very core, just understand that this inflation fight is not over. Yeah, there's a good chance that the next month inflation report is probably going to be lower, assuming gas prices don't shoot up by the end of this month. So if energy costs drop a lot this month, then that could contribute to a less aggressive CPI report unless things change. However, you don't want to get into this mindset of just thinking, oh, the inflation fight is over because now inflation has peaked, because it's not over. So this means you need to be smart with your money. You want to have cash put aside to protect you from any sort of financial emergency, and you want to have cash put aside to protect you. That way now you can take advantage of opportunities when they come your way, because we have high inflation and we have a slowing economy. And it doesn't look like either of these problems are going to be solved relatively quickly. Things are going to get worse before they get better, but this is where it creates opportunities for the financially educated, where now if you have the cash, if you are prepared and you're financially educated, then you can come in and take advantage of opportunities that come your way, meaning buying assets at a discounted price. So be aware, get educated, and start preparing, because While everybody keeps saying everything's gonna get better, it hasn't gotten better. They've been saying that for a long time, so start preparing today. Thank you for watching. If you enjoyed this video and you wanna see the 4.5 ways that you can create generational wealth for yourself and your family, I made a video covering that, and you can watch that video by clicking this button right over there. Thank you for watching, and as always, keep hustling. How many times have you seen kids of just rich parents who are completely spoiled, who have no idea of